Hello friends, I am Ravi Somani. I am a chartered accountant. Today we are going to discuss on one of the important recent amendments that has been brought by way of notification number 35 bar 2021 dated 24th September 2021. Now in this particular notification, a specific amendment has been carried out in Rule 59 of the CGST rules, wherein the the filing of GSTR 1 by a taxpayer is being blocked in case a person has not filed his GSTR 3B for the preceding month. Let me tell you that this particular amendment is going to be effective from 1st of January 2022. But then it is important for us to know the implications of this particular amendment of what is going to come forward in times to what is going to be forward in times to come. So in future, if a particular taxpayer is not filing his not making the payment of his GSTR 3B in the preceding month, the system is not going to allow that person to file GSTR 1. Now let me explain the same thing with example. Currently what happens is that a person files GSTR 1, but at the time of filing GSTR 1 there is no requirement to make the payment of taxes. But the moment you file GSTR 1, the customer is able to take input tax credit since the details of invoice are reflected in the GSTR 2A of the customer. However, the tax is required to be paid by way of GSTR 3B. Now, currently, this GSTR 1 and GSTR 3B are totally delinked. Now, what government is going to bring by way of this amendment is kind of an indirect integration between GSTR 1 and GSTR 3B, which means that uh, if you have not filed GSTR 3B of the previous month, system will not reflect. It will not show you uh, the it will not show you the text box or whatever uh, to click and file your GSTR 1 for the subsequent tax year. Now, the impact of this amendment is that a person who does not have funds cannot do a business, which means that whatever amounts or invoices that you are disclosing in your GSTR 1, you need to make sure that you are making the payment immediately by 20th of the same month. If not, you will not be able to file GSTR 1 in the next month of your tax period cycle. And same thing also apply to quarterly tax periods. Now, the important question that comes is how justified is this amendment? If government prefers or government wants to see that a person makes the payment of taxes every month, and if he does not have money, he just stops business. Because if I have to disclose my details in GSTR 1 and not make the payment of taxes, there is no mechanism which has been allowed now, which means that I either not disclose anything in GSTR 1, or I borrow the funds from anywhere and make the payment of taxes and get away. Another very important aspects to be noted is that if there is a difference between GSTR 1 and GSTR 3B, then there is another amendment which was brought about a year back, wherein Rule 21A can be invoked and the GST registration can be suspended. Now, let me tell you, if the GST registration is suspended, for all practical purposes, your business stops because you cannot generate your e-way bill, you cannot move your goods, you basically cannot do anything because your total GST registration is absolutely suspended. And let me tell you, this suspension can be done by the officer of the junior rank without giving any opportunity of being heard. There is no show cause notice which is required to be issued, which is absolutely draconian. Now, the various provisions, if you see in last 2 years that are being implemented, totally technologically driven, government feels that by using technology, they can kind of indirectly uh, impose pressure on the taxpayers to make the payment of taxes. So there was Rule 86A, which is blocking of input tax credit. Then there is a suspension of GST registration if there is a difference between filing of GST returns. Then there is blocking of e-way bill, which was introduced in case you not made the payment of taxes for the two tax periods. And now this particular restriction of blocking the GSTR 1 itself. All these provisions, very unfortunately, is that are coming by way of rules, and which does not have any parliament's sanctity, which has not been passed by way of an act in the parliament or the state legislature. Now, this is the most unfortunate way in which these all amendments are being affected. Now, I would like to bring in two important, provisions of the Constitution of India that we must be knowing in this regard. One is Article 19(1)(g) of the Constitution of India. Now, let me tell you, Article 19(1)(g) states that all citizens shall have the right to practice any profession or to carry on any occupation, trade, or business. And then there is Article 301 of the Constitution of India, which says that subject to other provisions of this part, trade, commerce, and intercourse throughout the territory of India shall be free. So, what is important for us here to know is that both Article 19(1)(g) and Article 301 of the Constitution of India also works in the realm of taxation. And there is a Supreme Court judgment in the context of similar matters, even in the context of taxation. One of the landmark Supreme Court judgment is in the case of Abdul Qadir. It's a 1970 judgment. But then over there, it clearly states that if a particular provision in the taxation statute uh, creates a direct bearing on the business, then that particular provision is straightaway violative of Article 301 of the Constitution of India. There is another landmark Supreme Court judgment in the case of Hathia Bari Tea. Now, in that particular judgment, it says that in general, taxes does not impact taxation does not impact the influence of Article 301, but those provisions in the taxation statute which have a direct and impeding effect on the functioning of the business, now those are absolutely uh, violative of Article 301 of the Constitution of India. So all in all, with this particular video, I wanted to bring to the notice of taxpayers that from 1st January 2022, the compliances under GST are going to be more draconian, and it is highly recommended to make sure that funds are timely allocated for taxation, and funds are the taxation funds are timely paid, so that you don't have to face all these kind of restrictions. But then we need to understand that businesses don't run like a machines where everything is smooth and proper and there is no problem. In a practical scheme of things, every business, no matter how big the business house is, would have fund flow problems. If government is of the opinion that if somebody is not making the taxes payment of taxes even for a month, we would block their ledgers, block their filing and all those things. And in my view, we are not going in the right direction. The technology is not being used in a right manner. uh, yes, I totally agree with the fact that government needs to have some reasonable restrictions for the people who are evading the payment of taxes, but it cannot be as short as a time given of 1 month. My humble suggestion or my humble view uh, by way of this video is that you put restrictions which are to see that the tax evaders are kept in check, but by virtue of these restrictions, don't create the life of tax compliant a more of a big problem. I hope you've got a good understanding of the amendment that is going to come from 1st of January 2022, and you plan your uh, business taxation accordingly. Thank you very much, and thank you for patiently listening.